And what I'm providing you is an example of the CUSIPs and these companies. And as you notice, every one of these CUSIPs do not have letters in the 7th and 8th character, yet many of them are OID instruments or interest payers. And so so you can't rely on the CUSIP numbers, and then we got beyond that. But I think what's interesting is even as simple as Arctic Glacier. Now, Arctic Glacier is a Canadian corporation, and one would think that a Canadian corporation would fit perfectly into our scenario at 2011. However, Arctic Glacier, under U.S. law, is a partnership. So therefore, it doesn't fit in 2011. It's going to fit into, at the end, 2013. As an example, also, if you look at ETFs, now, most folks think that ETFs are regulated investment companies, and that's true most of the time. But some ETFs are not a regulated investment company, and they're actually taxed as a corporation. So therefore, you're going to have to pull those out, and you'd have to process them in 2011 as opposed to 2012. These other categories, many of which pay OID and interest, you'd have to have somewhere in your system to identify these categories and apply them in the right way. And again, it's not only your security master, but the security master of all the other firms that you're dealing with. So it's not an easy job to do this processing unless we know that your master's in good shape. Now, what the IRS did is they carved out WIFITs. And I've talked to a lot of folks in the cost basis groups, and everybody says, well, they carved out WIFITs, there's nothing for us to do, et cetera. It's not part of TARP. And that's true, it's not part of TARP. But on the other side, there is a current requirement to do WIFIT reporting under the WIFIT rules, which went into effect last year. Although there is or was confusion for last year in that for WIFITs, mortgage trusts, what the IRS did by mistake is because of transition rules, they said that that there would be no, that they waived penalties in effect for all of the mortgage trust reporting, and the only reporting you had to do was the non-mortgage trusts. However, we still have to identify all these instruments in order to know how they have to be treated, even though they're carved out. Just to identify for you these types of securities, widely held mortgage trusts, there's 1.1 million CUSIPs that are Ginnie Mae, Fannie Mae, and Freddie Mac pools. They have principal paybacks, and for the first time, you were required to do the principal reporting to the IRS either last year, or some folks will be doing it for the first time this year. In the case of royalty trusts, the royalty trusts calculations are provided or should be provided by your broker. Also, the royalty trust provides a booklet, and some of these trusts are very complicated in that it depends on when you purchase the royalty trust, and in fact, in some cases they give you 20 pages of dates, of which you have to look up the date that you purchased it to determine, how you are to apply your cost basis. In the world of unit investment trusts, the grantor trusts, we are provided with an allocation factor. That's a sale that's occurring within the trust itself, and they're providing us with the cost basis adjustment, and that adjustment needs to be applied. The holders trust, in many cases there are corporate actions, so you have to not only pick up the qualified dividend, that's fine, but for cost basis purposes, you have to pick up the corporate actions, the cash merger, and report that, and that affects the basis. And in order to calculate the basis, and I don't know how to do that specifically, other than going to the website that the holders provides, and you put in your information as your purchase date and price, and it miraculously gives you an answer as to what that specific corporate action affected. Then you have the commodity trusts, and what was unusual about the commodity trusts this last year, we had expected that there would be reporting. However, there was no reporting because although the expenses, they had to sell the silver or gold to cover the expenses, the issuer said that it was de minimis, so there was no reporting for last year. I know some firms actually did do the reporting, but one could take a position that since the trustee did not report to their holders, registered holders, there was no reason for us to report that to our holders. And finally, we have the grantor trusts. So all these categories were carved out of TARP, but just because they were carved out of TARP doesn't mean that you don't have a requirement to do cost-basis reporting. Marty.
This is a question I asked myself. So this is an operations conference. I assume that your operations folks, so all the tax people tell you what the rules are, the IRS writes the rules, and then for all the service providers tell you here's the record layout. It's left with you to make it happen. So you have really the most difficult part because there's just so much to do in a short period of time. The question that I have for myself, and the question that I have to you, the question that you should be asking yourself is, do you have all your bases covered? One of the first things that you have to have that no one's mentioned to you, at this point you should have a company-wide project plan in place. But you have to identify what are all the tasks in the project, what are the due dates of those tasks, and you also have to identify the gaps and how you're going to close those gaps. So as an operations professional, that's probably the most important thing that you need right now. If you don't have it, you should get one in a short term. So I just want to talk to just a few of the topics. S corporations, the challenges of identifying S corporations within your new account system and documentation, remediation and repapering to identify S corporations, and will the IRS create a new W-9 form? I want to talk about post-year return on capital adjustments, backup withholding and short sales, and education, communication, and training. I'm sure you got